All right, all right, all right. Good morning, traders. Happy Wednesday to you. How's everyone doing? Do me a favor, let me know if you can hear the screen,
Get an
see the
up-close and
voice.
personal 360-degree view of your money.
There we go. Let me turn the YouTube down so you don't hear all that in the background. Good, 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 good. Welcome back. I'm on a new desktop version of here on Click Meeting, and I want to get rid of this. Oh, look at that. Push the right button. But welcome back. If you guys are joining on TradingView or YouTube, welcome to the New York Live Trading Room here at Tier. Hopefully the sound is working on YouTube. If not, it's just going to be one of those days. But pretty good analysis yesterday. You guys remember one of the analysis that we did was, or I guess for the trade of the day yesterday, was here on the Euro New Zealand, a trend continuation trade. I didn't put this in the YouTube version. We didn't check this till later, but we added our volume profile indicator to give more confluence to that zone that we're looking at. And price action went to that zone, and you can see it went right past it. And I wanted to start with this. We have another trend continuation opportunity to look for. I want to start with this because not to show that, hey, I'm awesome at analysis. We did great predictions, stuff like that. But you'll often see scenarios like this. Hey, Kenroy, you'll often see scenarios like this cause traders a lot of pain, right? Why do you think that is? How can a winning trade, how can a solid prediction cause traders pain? What do you think? Let's get those gears spinning to start off the day. FOMO? No, not FOMO. Let's pretend the trader was actually in the trade and they made money, right? How can a winning trade still cause traders pain? They're in the trade, they made money. It did everything they thought it would do. How can this still be a negative? Yep, Orsi, you nailed it. Wanting more profit. Jagger, you nailed it. Blasting past targets, right? So we had a pretty solid target level, right? We had a pretty solid risk reward. And what you'll see a lot of new traders do, and well, I shouldn't say new traders, but a lot of traders in general do, is they'll see this, they'll be happy, but then they'll get upset that they didn't catch that, right? And you hear about traders calling tops and bottoms, and even in testing, we dealt with this with Andrew in the last, you guys remember the Q&A session we did about target taking and wanting, he wanted to be in every single big move, but wanted to be out of every single move that retraced. And it's not possible for you to catch the exact bottom to the exact top of every move consistently. It's not possible to be a part of the exact top to the exact bottom of every move consistently. And if you set those expectations so high that you need to catch every single tick, every single pip of the move, there's no way you're ever going to achieve it. And you're only going to be faced with defeat. And what happens is your bad trades are going to affect you because your bad trades lose, so they're bad. Your good trades are going to affect you because even though they won, they didn't catch everything, so you feel like a loser. And what happens is that goes on to really influence your next trades, right? Your next trade setup, instead of projecting a target here, you project it in a different place. Or instead of taking targets off where you're supposed to, you hold on to the trade and it hits your targets and bounces back for a break-even trade or a loss. So a good lesson for newer traders, and trust me, I think I've been through this, I think we've all been through this, is that you have to eliminate the idea that you need to catch, quote unquote, all of the move, whatever that is. You just have to catch your portion. And that's how consistently profitable traders stay consistently profitable. That's how you stay in the game for a long time. Get what you're supposed to get out of the trade, and that's it. We used to use the bank robbery analysis. Then OG said I had to put some disclaimers up. But like, if you're going to rob a bank, do you have a much better chance of success if you pre-plan what you want to take from the bank or the jewelry store, and then you go in and only take the specific things you're supposed to take? Or do you have a better rate of success if you go in there and you try to get as much as you can? You try to fill every bag to the brim, right? In the latter situation, you're more likely to get caught. In the former situation, you're more likely to get away with it. Perfect time to say Tier 1 trading does not support, encourage that you rob banks or commit any type of fine or felony or crime. That is not telling you guys to do that. Simply an analogy. Disclaimer. Darn it, OG. I thought you weren't listening. Like I told you, Akil, one more time with that. So I want to get that lesson out the way. We have another trend continuation opportunity coming. Is Chris? Other Chris is in here. I did find out some information for Chris if he comes in about the risk reward indicator that we're building out, but I'll wait till he comes in. Let's head over to, it's going to be very similar. I had a bunch of opportunities that on my radar today. None of them really super great. But let's go to New Zealand yen for today's trading opportunity day. And we may be a little bit late on this. Keep in mind, I do my analysis 5 o'clock in the morning. So it's a little bit of there's a big difference between what I see this morning and when we get here in the live room. But let's start on the daily. Let's go through that beautiful process. IPDE, identify, predict, decide, execute. If you guys are new, that is a 4-step process that if you implement it in your trading, trust me, it will do wonders. Darryl says, sounds like you put a lot of thought into the bank. Hey, well, look, we just got through watching Money Heist. I want to go back and watch the Italian Jobs. There's that other movie, I forgot what it was called. If the guy plays a dude with I think Edward Norton is his name. He plays a guy with like mental health issues. I love bank heist. A good bank heist, man. If you can executing a good bank heist is like executing a good trade. You guys are gonna see me on the news like 10 years from now, getting caught robbing a bank, and you'd be like, should have back tested a little bit better, Akil. But let's get to that 4-step process, IPDE. So let's identify, right? Let's take a look at most recent structure. Identify what has price action recently done. Make sure to wipe the recording so not to self-incriminate. Ooh, I read a really good. We won't get into it now because we're gonna turn into ranty on live stream. But I read a really good article about technology and the tracking ability it has. You guys know I'm already paranoid about that type of stuff, and I don't like it in Robot Apocalypse. But ridiculous with the different facial recognition and voice recognition stuff that's going out there. It's going to be impossible to remain anonymous unless you literally disguise your voice and walk around with like an animal mask. But let's identify what is inside man. There we go. Thanks, Cody. Price action has recently broke our most recent structure high, right? Well, it's breaking. We'll see it broke on the 4-hour. right? So we identify that. That allows us to make the prediction that price is likely to do what? Again, easy 4-step process for you guys. Identify, predict, decide, execute. Go higher, right? So we're looking for bullish opportunities here. Now, already, this is not what I want to talk about, but some of you guys may see something setting up. Can you see anything that stands out in your screen? As the market kind of ebbs and flows and retraces and fails to extend. Yep, a potential Gartley pattern. So we'll draw this on just to draw it on. But if we start here, this is going to be our X leg. This is going to be our A leg. Again, we talked the other day about not forcing patterns, making sure we're doing everything in order. So let's start on the first leg, X to A, swing high to swing low. Let's take our Fibonacci retracement tool, measure that same swing high to swing low, and the retracement that we come to will tell us what type of pattern it is, right? So the fact that we come to the 618 tells us that, are we on alert for a bat pattern? Job, Chris? No, we can't be on alert for a bat pattern because we know that the 618 is hit. That violates the bat pattern. Can we be on alert for a butterfly pattern? No, we can't be on alert for a butterfly pattern because we do not hit the 786, right? So we know that with the 618 hit, we could be looking for one of two things. In this situation, it's only one thing, a potential Gartley pattern. We want to make sure our C leg hits the proper requirement as well. Yep, a 618 is hit. And then we can, this is going to be our B leg, by the way. This is going to be, that's a horrible B, so I can fix that. Ooh, there we go, lowercase b. This is going to be our C leg down here. And we know that in order to have a D completion, I should say the D completion point and zone for our completed Gartley is going to be at our 127 extension. So looking at an X to A, an A to B, a B to C, a C to D right there, and our completion zone being from the start of the 127 extension right here to the top of our previous structure looking left, our X leg. This is our zone for a potential bearish Gartley. Bearish Gartley. So we can keep that in mind because that may help us with target placement for the lower time frame trades. We'll keep that. I'll erase the actual Gartley, but we'll keep that zone on the chart as we go down to the lower time frames. Now we go down to the 4 hour. And again, told you that we had a break and close, right? You can see the break and close above this level, even this little minor level looking to the left, break and close above that, right? We can see the candle so far, right? This is a 4 hour candle, so it still has about an hour and a half or hour and 50 minutes before it completes. But we can see that we already started retracing and we're trading back towards the high, right? So in this situation, again, we identified the higher high, higher close. We're predicting a continuation higher. Now we're asking ourselves if we're likely to go higher, then where we're likely to go higher too. Now I got a question on TradingView or a comment on TradingView saying, hi, disagree. Sorry, I'm a little late in reading that. Can you explain what you disagree about? And we can have that discussion. Apologies, I'm not looking at the chat all the time, and you guys are a little bit delayed on TradingView and YouTube, so you got to be specific with what you're referring to, and then we can have the conversation. So I'll check back in a little bit after you have some time to type it in. But we have the higher high, higher close, right? Again, different ways to look for moves higher. My preferred way is a pullback and then looking for an extension. What is another way that traders may look to catch a continuation? I was about to use the word that that gave you the answer. Hey, what's going on, guys? A lot of familiar faces over on YouTube. Yeah, a breakout, right? Maybe we do some type of sideways consolidation. And this can come in so many different forms. It can come in triangles, it can come in wedges, but maybe we do some type of consolidation where the pattern is kind of making, or the price, is making up its mind, and then we get a breakout to the upside, right? The point is that we're looking for longs, looking for longs, looking for long. Now, if we go one more time frame down to, let's say, hourly, I do want to look at a range bar chart, right? You can see we have a retracement. Now, this is where your rules are going to come in handy. I disagree that he disagrees. Well, we don't know what he disagrees at, so we can't disagree with him disagreeing until we find out what the disagreement is about. It could be about the bank robbery. It could be about me telling people not to rob banks. Maybe banking robbery is I don't know. We'll find out if the trader responds. He hasn't yet, so maybe he might have left. He might have disagreed so much that he decided I am no longer wasting my time on this live stream. But we'll see. I would like to hear. I love discussions. I don't really have a big ego, so I'm not. I have to be right type of person. I like discussions because typically I think everyone can learn from discussions. Was that a butterfly in a 4 hour? 4 hours. Sorry, I thought daily. Was that a butterfly in a 4 hour? Yeah, could be. If you're looking at this as an X to A jagger, yeah. Hold on real quick. Also going to depend on how you do your D point. So if you're doing a 127 from A to B, then yes. If you're doing an inversion, probably going to be a little bit short. So 127 from A to B, boom, nailed it. If you're doing a 127 inversion from A back to X, it's probably going to be slightly short. Good eye. So we go down to, I lost my train of thought here. Disagree guy, come on. I'm intrigued by this discussion now. I'm curious. Now it's bothering me. I want to know. I want to have this discussion on what is a disagreement so I can clear it up. We go down to the hourly. Now, I said this may or may not meet your rules, right? If we go back to Tom's trading plan that we discussed in Monday's Q&A, right? One of the things we had to do is we had to retest previous structure, right? This is our level of previous structure right here, this white line. Did we hit that line? You can see it lines up with the initial kind of double top here as well. We did not hit that line. So if your rules require that you must come back into previous structure and you must come back as defined as touched, you got to let this go. If not, then you're free to trade it on whatever your entry reason is. Let's say you want a higher high, higher close. You may get that right here. If you can't, you may have to wait for maybe some sort of complex pullback where the market puts in a multiple leg pullback, comes down into this zone, which is the preferred zone in my opinion, and then gives you a chance to trade higher if we don't create some type of sideways consolidation. So I do want to go back down to the lower time frame. I am going to sneak a range bar chart in here from another unnamed platform. So I hope TradingView doesn't boot me out because of that. But just like Euro New Zealand yesterday, I also think this is a good day trading opportunity, and I'll show you why. But real quick, Orsi says, Akil, if someone doesn't see that B to C leg valid, it could turn into a potential butterfly on the daily. Let's go back to the daily real quick. If someone doesn't see the B to C leg valid, it could turn into a potential butterfly. Yeah, could. I mean, we're a ways away from that right now. But yeah, it could be if you don't have this as a retracement right here, then yeah, this would be your B leg right here, and then you'd be looking for a C. That is fair. All right, so let's go down to a lower time frame real quick, a 15-minute chart, and just see if there's anything else that gets here. Now, again, if you're on a 15-minute chart, you're going to get signals a lot quicker. That's how lower time frames work. You can see you've got a beautiful higher high, higher close right here. You got 3 low momentum candlesticks, right? Small ranged bearish candles, followed by that higher high, higher close. I do want to take a peek at the range bar chart real quick as well. Very quickly. Give me a second to load it up. I wish Ninja or TradingView would give us some better range bar charts, but I understand why. What's our ATR here? Let's go to an 8 range. 80, you're going to see it in a little bit. And again, this is something from a day trading perspective. I would watch this on a range bar chart. Because again, if we're looking at this as a potential move higher, you're going to get a lot of ebbs and flows here on a range bar chart that you may not see on a minute-based chart. If you guys aren't sure what a range bar chart is, just let me know and I can fill that in. But essentially, we're going to do the same thing we always do for our trend continuation opportunities here, right? So we're asking ourselves, right? Where is our final destination, right? Let's say our final destination is up here, right? This is the starting point of the pattern completion. Let's say our final destination is up there. Sorry about that, bouncing the charts around, right? Each time you get a fresh break, that's another opportunity to trade it higher. So what I mean by a fresh break is each time we violate a level of structure. So if we violate a level of structure, fresh break, look for pullback. We violate a level of structure, fresh break, look for pullback. We violate a level of structure, fresh break, look for pullback. And you can do that until we reach that final destination. And if you guys are here, I mean, understand, like, you're going to, if you've been, I really appreciate you guys have been joining the live stream on a kind of a daily basis. Something you're going to notice is that it's going to get a little bit boring because the analysis doesn't really change from day to day. And for some people, that's boring. They come in they want to trade for entertainment. They want to see a new episode and a new villain and a new this. The reality of trading is typically if trading is boring, it means trading is really good. Why? Because you're executing like a machine. You're doing the same darn thing every single day. And that's how you become consistent. So cool trading opportunity here. I do want to do one more thing. I'm just curious here. Again, we've been playing around with our volume profile a lot this year. So I'm curious to see what that's going to show us amongst all this kind of clutter up here, if there's anything that stands out. And not really. So nothing to add there. All right. Any questions about New Zealand yen here and our potential trend continuation opportunity? Very similar to yesterday's Euro New Zealand. Question, regardless of the entry, would there be enough meat on the bone though? Well, that is going to be a question that is up to the trader, right? Because all of our appetites are different, sticking with the food references. So let's look at this real quick, right? Some people my wife gets full off a little bit of food. For me, I got to eat like a whole plate to be full. So it's all different. So there's no one set margin for every trader. I'll give a good example, right? So as I've evolved in my trading, I have a minimum requirement of 15 pips, right? If a trade doesn't offer at least 15 pips of profit, I don't take it. It is not worth it to me. At the same time, I know many traders out there who, guess what? They will kill for 10, 15 pips a day or 10, 15 pips on a trading opportunity. So it varies. Real quick, got a few traders asking, hey, can we look at Aussie Canada or Canada yen? These are basically I call these pairs the triplets, New Zealand yen, Canada yen, and Aussie yen. They're not exactly identical, but they move pretty similar. Unfortunately, Daniel, here on the YouTube or TradingView live stream, we're only going to look at one trading opportunity a day. My trade of the day, so the one that I think is the best and the most educational. However, if you want to hop in a live room here at Tier 1 Trading, do so. We're going to be here for another few hours, and then we can look at anything you want to. Minimum 15 pips per trade. Interesting point of view. Yeah, and it really has to do with it's two things: what is worth your time, and also you got to take commissions and spreads into account, right? So if you're going to pay a certain amount to get in and get out of a trade, right? Let's put this for example. If you're a trader that is looking for and this is why scalping isn't a real thing for retail traders. If you have a target profit of 5 pips and it costs you 2 to get in and 2 to get out, you're basically paying in commissions and spreads what you gain from the trade. So are you really gaining anything? Right? That's the kind of difference between the demo trading and the real trading. And in demo accounts, you don't necessarily see that commission and spread and slippage and all that stuff play a factor because, it's not real money and they don't want you to see that part because that's going to discourage you from trading. So you have to ask yourself the question, what is the point where the cost of executing a trade overshadows what I can get from a trade? I'm trying to think of an analogy right here where it's like, it's like, I don't know. Is it worth, like, if you're doing something that requires hard work, what is the point where where it's not worth it? right? What is the point where the effort isn't worth the reward? I guess is a good analogy. And that's going to be different for different traders. I know some traders where it's like, look, if I can't get 30 pips from a trade, it's not worth it. So you gotta think about that for a second. It reminds me of like I started off in the stock industry, right? So back then I was trading I think 3 in and 3 out. It cost me $3 or $6 to execute a trade, right? 3 to get in, 3 to get out, something like that, or 6 to get in, 6 to get out. I don't remember. I was with like E-Trade or someone, and so I remember I was buying stocks, and I wasn't buying a lot of stocks, right? I didn't have a lot of money. So I was in there looking at like Microsoft for like $30, and I was buying like one share, like stupid stuff, right? Just to get exposure when I first got in. And I'd buy like one share of Microsoft. If you know anything about Microsoft, Microsoft used to move like a turtle, right? So you're in Microsoft for like 4 months and it moves like a penny. So I'd get out of Microsoft. I'd have a couple shares. I'd get out of Microsoft, and let's say I'd make like a $10 profit off my few shares, right? So I'd be all excited about this $10 profit. I'll load up Microsoft real quick. I'd be so excited about this $10 profit because again, I'm new. I'm just like, the market moved up, yay! This is back in like 2009, right? So I made this $10 profit, and I look at my account balance. I'm all excited because I made money, do the money dance, right? All that fun stuff. And then I realized like my account balance is less than what I originally had. Well, why is it less? Well, because E-Trade gave me that $6 cost to get into the trade, and then it charged me $6 to exit the trade. So there's that $12 turnaround. I only made $10 of profit from the trade, so I'm negative two at the end of the day, right? So trading is the same way. Again, a little bit different depending on what market you're at, but the point is there has to be that point where the effort is not worth the reward. And gosh, I hate looking back at this stuff. I did something stupid the other day, Cody. I went back and looked at my entire portfolio for my stock trading career, and I want to jump out a window. Oh, the stuff I had that I didn't hold on to because I had no idea what I was doing. I just would get excited at the first bit of profit. Oh, my portfolio, dude, if I can tell you how much my portfolio would be worth now, of course, coulda, shoulda, woulda, but man. Oh, yeah. I don't like it's yeah. You can't live in hindsight, right? You can't live in hindsight, but I can teach it to my children. That's the one thing. But man, dude, if I would have had the foresight to just hold on and not be greedy and make money, or take money, dude, I'd be killing it. But you live and you learn, and there are more opportunities like that now, which is cool. Like when we bought oil a couple years ago, Cody. So I hope that answers the question, and we'll actually go back and look at it. I didn't answer the question about how much meat is on the bone here, and then I see a few more questions on YouTube. I get to. Jagger says on the live room chat for the 15 pip rule. Do you go back to your back testing data and cut those little trades out? I do not know. It started. So it used to be. What did it used to be? It used to be years and years and years ago. I actually adjusted. It used to be 10 pips, and then as I've gotten more successful, my minimum, it sounds bad, but my minimum has gotten higher, right? Certain stuff just isn't worth my time anymore. And even more so when I stopped day trading, right? When I stopped day trading, that changed things a lot. But yeah, if you're considering a minimum before you start trading, then yeah, you go back and you go through either when you're back testing, you don't take any trades that don't have that minimum. But let's say you're creating this minimum rule after you back test. Yeah, you go through, you take them out, and then you compare results of with and without, if you're looking to kind of see what's the most profitable style. But let's go back to this as well. 4 hour here. So let's say we pull back a little bit. Let's say we move from where we're currently at to our 127, right? There's about 60 pips of profit there. So the question that you have to ask yourself is 60 pips of profit enough? And it could be 70, again, depending on how you get involved. Could be 50, depending on how you get involved, if you're breakout or pullback. But the question you want to ask yourself is 70 pips enough? And of course, what's more important is weighing that with your risk reward. Do you have a quality risk reward? But if a 70 pip profit potential is too small, then boom, don't take the trade. Simple as that. If it doesn't hit the minimum, don't take the trade. Gamblinator says, no, I read it already. Canada yen, New Zealand yen, multiple advanced patterns forming on them. It's amazing. Good afternoon, Key. Over the weekend, I was looking at Canada, Aussie yen, Canada yen, New Zealand yen. Saw multiple advanced pattern formations on them. It's amazing. Yeah, I saw the same thing. It is right. It's the junk, what looks like junk. If you look at it the right way or look for the right things, could be gems. I am with you right away, or 100%. And those three pairs move so similar. Those triplets. So like, I wouldn't necessarily have all three of them in my portfolio, to be honest with you. I'd take one or two because you don't want to get overexposed with yen pairs. Trust me, that was a $30,000 lesson that I learned early on in my career. But yeah, three, they move kind of similar. So when one has something, the other one should be close behind. By the way, last year in one of your videos, you recommended reading Trading in the Zone by Mark Douglas. I can't thank you enough, Akil. It's a life changer. Yeah, it's a beautiful, beautiful read. I think every trader should read that at some point in their career. Jason Grayson always says this. He says you should actually read it after you started trading. So I used to get mad at myself because I read it after I was already trading. I was like, man, if I would have read this earlier, I wouldn't have made all these dumb mistakes. But he made a really good point. He said, you're probably not going to take what's said in that book seriously until you're kind of in it, right? If you read it before you start trading, you're probably like, yeah, I'm not going to do any of that stuff. Yeah, nah, not me. But if you read it while you're trading or when you first started trading and you kind of realize like it hits home a little bit more, you're like, oh, because when I read it, I was like, man, that's me. I said, did this dude just write a book about me? So it kind of has more importance there. Gamblinator says, I tried 10 pips per trade a day. You have to use lower time frames. If you factor risk reward ratio, you realize you're walking on a very thin line. Yep. Again, that's the thing with I hate these scammers out there that talk about their scalping. My scalping strategy, like retail traders can't scalp, right? Unless you have got a massive account size where you've negotiated with your broker to get a fraction of a pip spread, we can't scalp. We can't scalp. You're paying too much. And I guess it depends on your definition of scalping, but like I always look at scalping as definitely single digits. Some people even less, right? Definitely single digits. And again, if you're paying normal retail spreads, you're not going to like try to get 5 pips from a trade. You're not really getting 5 pips, and then you're adding that to your losses as well. So like it's a myth. It's a very, very good point. Very good point. All right. I think that's a lot. Doug says got a lot more out of Trading in the Zone since reading it only this year. Great book. Great book. All right. We're going to kick the live streamers out in the most polite way possible. On your way out, as I boot you out the door, please do me a favor, hit that like button. Hit that like button as you fly out my house. I appreciate it a lot. It supports what we're doing here. I'm really liking the questions we're getting from this live stream. We're getting a better and a better community here. And, I spoke to our traders in the live room and they love the conversation as well because they can kind of see the differences between some of the newer questions and the older questions, and it kind of gives them perspective. So that's really cool. We do have a trader coffee break today as well at 10 o'clock. We're going to be live on YouTube, the trader coffee break at 10. Jason Greystone and myself talking about something, either drawdowns or post-market analysis. We haven't decided yet. We'll figure it out a minute before the show. But check it out. I'll see you guys then.